What's up, guys? Welcome to another podcast here with Chris. How are you, Chris?
What's up, brother? Good,
So
good.
this is the video right after the Feds make a decision, and we've been kind of talking about this for the last couple of weeks, and we mentioned 0.25% was a shoe-in, but towards the end we started saying maybe that 0.5% might happen,
Yes.
and it happened, but we haven't seen the reaction that we wanted. And rates, as far as we care about, right? Mortgage rates didn't necessarily drop down yet.
No, why do you think that is?
Well, I mean, what they're explaining is, I had already explained that most of the market, especially the bond market, the one that really, keeps track and really suggests what mortgage rate should be at, they had already priced in a certain amount of that percentage that dropped. So the 0.25% was already a shoe-in, but in the last week leading into it, mortgage rates ticked down a little bit lower because now there was a reversal in their thought process, and they're saying now we think it's going to be 70% chance that it's going to be 0.5% because the jobs report came in lower than expected.
Okay.
So what that did is it gave the market a reaction saying, you know what, we're starting to see jobs drop down enough where now the government's going to be paying attention. Now they should really see that our economy is not doing as well as it should be doing. So that 0.5% came into play. So our mortgage rates in anticipation had already kind of built that in as well.
Yeah, I remember we were talking about that,
Yeah.
and you said that, hey, you're not going to see like a drastic change yet because it's already priced in.
Yeah.
And that's exactly.
Yep.
Because where are rates at today?
So for example, if you're going to get into an FHA, depending on your credit score, is low fives to mid fives. Conventionals, if you pay a point or so, high fives to low sixes.
Okay.
So that's still a lot better than they were back in October when the rates were close to 8%.
Yes.
So obviously we have seen rates drop down, but there's not an exact correlation between the Fed funds rate, because Fed funds rate, what it is it's overnight pricing that the banks pay to borrow money from the Feds.
Right.
So that's short-term monies. So for those of you that were worried about your credit cards, as far as the rates keep jumping up, they actually start going the opposite direction. So the Fed funds rate is tied to your credit cards,
Yes.
to personal loans, the home equity lines of credit,
Auto loans, everything.
all those short-term financing. That's going to help us. And what that means for us as a consumer, that means that our cost to borrow the short-term money is going down by that 0.5%.
Like during the pandemic, right when it hit, right,
Yeah.
they dropped it to zero,
Right.
and that's why everybody
Right.
started refinancing
Yeah.
and buying properties. I remember.
Yeah.
That's bizarre.
So now the government, what they kind of said, Powell said at the meeting was, we don't think that there's going to be a recession anymore. We have it a little under control. They
That's
feel
good.
that unemployment is not going to jump up dramatically like they thought they were. And they see that inflation is actually dripping down lower and lower every time there's a new report.
That's good.
So they feel they have it under control, which in a sense kind of spooked the bond market. And that's why we're saying they're going to wait. And there's usually a reaction that happens a month or two after the decision because
Wow.
they want to see what happens with the market, what new reports come out after the fact, and see if that trend's still going. The Feds are estimating that unemployment is not going to get to 5% even until next year, which
Wow.
doesn't make sense to me because I see a bunch of corporations laying off a bunch of people, a bunch of stores closing.
I have seen that too, man. That's bizarre. Yeah. So let me ask you one question, Edgar. Let's just say we have a first-time home buyer. They want to go FHA, and let's just say they have a 720 credit score. Can you give us a scenario? What do you think would be their rate? What would an estimate?
So check this out. I did a calculation for somebody at a $420,000 purchase price.
Okay.
Going FHA, their payment was about $3,000 even.
Okay,
That's
good.
about $200 less than it was a month ago.
That's
So
really
that's
good.
really good. So again, people are going to start coming into the market. We keep
Yes.
talking about this because we did mention this the last time too in the summer, where we were saying that as rates come down, guys, if inventory doesn't keep up with it, that means that the inventory that's there is going to be swallowed up, and we're going to see some, over the asking bidding again. And
Yeah, because I have seen some of that in certain areas still, even though you see the price drops. What I've experienced with my buyers right now is when we go out looking, inventory still is low, and it's like, well, I want that house, and then I kind of ran into that a couple weeks ago, where it was like, well, the
What's the
seller
most?
the seller wants this is what the counter is, this is what
Yeah.
take it or leave it. And then my buyer was like, "Oh no!" And we were just like, "Hey," she was like, "I can't do it."
No, I mean, the AV
you
is
gotta
still
be ready.
affordable.
Yeah.
So even if, again, like you think that you were looking at $1 million homes out here, but we're not really.
No.
So it's still affordable. People are feeling more comfortable about offering over asking and being involved in the market again.
Yes.
And as their payments lower, why not?
Yeah, because I took a lady I met her through Zillow, She came all the way down from San Jose, and we did our home inspection yesterday in California City.
See, there you
She's
go.
like, I was like, how much would a house like this cost out there? The square footage, right?
Yeah.
Like almost 1,800. She's like over $1 million.
Yeah.
And I'm like, well, she's like, that's why I'm coming out of California City. You know what I mean?
We're in a unique area, so
Yeah.
this is what's going to happen, guys. So being in the AV, being close to San Bernardino,
Yeah.
Riverside, we're in an affordable situation.
Yeah, and it's not like the commute is that far.
No.
So like, you know what I mean? Like Palmdale's still the closest to the commuters
Yep.
that are driving down below. So yeah, man, you gotta get out there.
Yep.
Yeah.
And again, don't expect for the rates to be in the fours quite yet, guys. But if they are, then you're expecting the homes to be a few percent higher too. So it's
Yeah.
going to be balancing out. So jump on it now.
Jump on it now, yeah.
Then wait for the rates to come down to refinance. So that's what we keep preaching. So make sure you
Yes.
take advantage of that.
Yeah.
All right, guys, reach out to us for more information. We're here for you.